A new era of trade has begun. Trump's tariffs and national security. The year is 2025. President Trump, in his second term, has enacted a series of tariffs on goods imported from several countries. This includes key trading partners like Canada, Mexico, and China. These tariffs, essentially taxes on imported goods, are a cornerstone of Trump's America First economic policy. The administration argues that these tariffs are necessary for national security. They claim that a reliance on foreign goods weakens the United States. The tariffs have ignited a debate about their potential impact on the American economy. Proponents argue that they will protect American jobs and industries from unfair competition. They believe this will revitalize domestic manufacturing. Critics, however, fear a trade war. They argue that tariffs will raise prices for consumers and hurt American businesses that rely on imports. The automotive industry in particular is watching these developments closely. Tesla, the electric vehicle giant, is no exception. With its global supply chain and ambitious production goals, the company is uniquely vulnerable to disruptions in international trade. The tariffs imposed by the Trump administration pose a significant challenge to Tesla's operations and the future of the electric vehicle market. The global trade war has intensified, products affected, and retaliatory measures. The tariffs imposed by the Trump administration target a wide range of products. Steel, aluminum, and manufactured goods from China are particularly affected. These materials are crucial for the automotive industry, including Tesla. The tariffs have already prompted retaliatory measures from other countries. China, for instance, has responded with tariffs on American goods like soybeans and automobiles. Canada and Mexico have also retaliated with tariffs on American products. This tit-for-tat exchange of tariffs has escalated tensions and fueled fears of a global trade war. The interconnected nature of the global economy means that these tariffs will have far-reaching consequences. Businesses and consumers across the world are bracing for the impact. The tariffs could disrupt supply chains, increase prices, and dampen economic growth. The situation remains fluid, and the ultimate outcome of this trade war remains uncertain. Tesla's global reach has a supply chain spanning continents. Tesla, despite its American roots, operates on a global scale. The company sources parts and materials from all over the world. This global supply chain is essential to Tesla's ability to produce its electric vehicles and energy products. From lithium for its batteries to electronics for its cars, Tesla relies on a complex network of suppliers. This global approach allows Tesla to access the best materials and technologies at competitive prices. However, it also exposes the company to risks associated with geopolitical events and trade disputes. The tariffs imposed by the Trump administration directly impact Tesla's supply chain. They threaten to increase the company's costs and disrupt its operations. Tesla, like many other global companies, must now navigate this new landscape of trade barriers and uncertainty. The company's response to these challenges will have significant implications for its future and the electric vehicle market as a whole. The price of protectionism tariffs and Tesla's production costs. The tariffs imposed by the Trump administration pose a direct threat to Tesla's bottom line. The increased costs of imported parts and materials will inevitably push up Tesla's production expenses. For a company that is already struggling to achieve consistent profitability, these added costs are a serious concern. Tesla has two main options to deal with these increased costs. The company can choose to absorb the tariffs, taking a hit to its profit margins. This strategy may be unsustainable in the long run, especially as Tesla ramps up production and aims to make its electric vehicles more affordable. Alternatively, Tesla could choose to pass on the increased costs to consumers by raising the prices of its vehicles. This move could make Tesla's vehicles less competitive, especially as other automakers enter the electric vehicle market. The company faces a difficult choice, and its decision will have ripple effects throughout the electric vehicle industry. Tesla's CFO speaks Vaibhav Taneja on the impact of tariffs. Vaibhav Taneja, Tesla's chief financial officer, has acknowledged the risks posed by the Trump administration's tariffs. In a recent earnings call, Taneja stated that the tariffs would have an impact on our business and profitability. He emphasized the challenges and expense of localizing supply chains in response to the tariffs. Taneja's statements reflect the growing unease among business leaders about the potential fallout from the escalating trade war. While Tesla has not yet announced any specific plans to adjust its pricing or production in response to the tariffs, the company is clearly concerned about their potential impact. Taneja's remarks suggest that Tesla is exploring all options to mitigate the damage. However, the company's ability to fully insulate itself from the effects of the tariffs remains questionable. The EV market in flux. Navigating the uncertain terrain of trade wars. The tariffs imposed by the Trump administration are not just a problem for Tesla. They have broader implications for the entire electric vehicle market. Increased production costs due to tariffs could slow down the adoption of electric vehicles. Higher prices could make EVs less appealing to consumers, hindering the transition to sustainable transportation. The tariffs could also accelerate the push for localized manufacturing in the electric vehicle industry. To avoid tariffs, companies may be more inclined to source parts and materials domestically, even if it means higher costs. This shift could reshape the global automotive landscape, potentially leading to regional hubs of EV production. The long-term consequences of these changes are difficult to predict, but they underscore the significant impact of international trade policies on the future of the electric vehicle market. Staying ahead of the curve: international trade and the future of EVs. The trade war initiated by the Trump administration serves as a stark reminder of the interconnectedness of the global economy. International trade policies can have a profound impact on industries, businesses, and consumers worldwide. For the electric vehicle market, which is still in its nascent stages, these policies can be particularly disruptive. As the situation continues to evolve, it is crucial for stakeholders in the electric vehicle industry to stay informed about developments in international trade. Companies like Tesla will need to be agile and adaptable to navigate the challenges and capitalize on the opportunities presented by this evolving landscape. The future of the electric vehicle market, to a large extent, hinges on the ability of policymakers and industry leaders to find a sustainable path forward in an era of heightened trade tensions.